Good afternoon and welcome to today's webinar series where we welcome Phil Alampi from CONVR to talk about creating super underwriters in doing more digital underwriting. My name is Truman Esmond. I'm the Vice President of Solutions and Partnerships at AAIS. And we'd like to remind you to use the QA buttons at the bottom of your screen to submit questions that we will answer at the end of the presentation. And with that, I will hand it over to you, Phil.
Okay, thank you, Truman. Appreciate it. And good afternoon, everyone. Thanks for taking the time to join us today. As Truman mentioned, my name's Phil Alampi. I have been with CONVR for about 2 years now, and it's my pleasure to speak with you today about artificial intelligence, creating super underwriters. We're going to have some fun. There's some polls, there's some extra information in here, and there's some opportunities for you to get involved. So with that, let's go ahead and jump in. So to start out, we'd be remiss if we didn't give some attention to the impact of COVID, the pandemic, all of the other things that the industry and really the world is dealing with right now. So we're going to spend a little bit of time on that. And then we're going to go into what a super underwriter is and talk about why we all want to create them. And then we'll talk a little bit more about how you use AI in the underwriting process, in particular the commercial underwriting process. And then from there, we will go into some steps, some practical tips on how you can innovate and actually put these things into play. So I hope you find this useful, and I'll tell you at the end, I welcome everybody to send questions in. There should be a chat box that you can use during the presentation. Or if there's something more in-depth you'd like to discuss, my email will be at the end of this presentation, and I'm happy to connect with you offline. So that being said, let's start out and talk about the impact COVID-19 has had on insurance. And no big surprise, right? The first thing is there's an increase, a significant increase in business interruption claims, whether this is an exclusion or not, whether there is physical damage or not. There's still a lot more claims coming in and a lot of litigation that is and will likely continue to be spawned as a result. And also, not surprisingly, right, demand for business interruption coverage and other types of coverages is starting to surface. And there's almost a opportunity for some niche coverages to now emerge and become more standard. And you can see from this data, right, the market interest is definitely there. Again, despite some of the uncertainties associated with what applies as BI and what would not. And finally, the last sort of data view on COVID I'd like to share with you is really no big surprise. Basically, every line is taking rate or cutting rate by less in the case of workers' comp. But markets are hardening. This, I think, is well known to us, and it makes sense in the current economic conditions. So one trend I see here, right, is the landscape of what we have to manage as an industry is changing pretty drastically, and understanding what businesses are going through as commercial underwriters is becoming even more paramount importance. So we need to keep finding new ways to get the right insights at the right time within the underwriting process and really within the whole policy life cycle. And this is going to be critical. This is going to be a core competency for carriers that have and continue to invest here, because otherwise it's really hard to have the transparency you need to make the right decisions. So I think, if anything, this whole pandemic situation has really expedited the need for us as an industry to have better information crunched more effectively at the right time. And that being said, we did have our first poll now. So thinking about what's going on currently with COVID, this question is, how likely do you think innovation is to help insurers during and post COVID-19. And if you take a moment and choose an answer, we'll look at the results in a minute. But basically, these options go from very likely to highly unlikely, really depending on how you view the importance of innovation. So let's just take a few seconds now, let everyone finish up their voting, and then we'll take a look at the results. Okay, has everybody voted? Let's go ahead and look at the results. Okay, and I'm highly biased, so of course I'll be in the top box, very likely. Looks like about half of us here who voted agree with that. There's another big chunk, almost the entire other half, that agrees it's likely. And there's a smaller group that sees it as a possibility. So the good news is, I think, to be on this webinar today, we all see the value in innovation, right? And we see what it can do for us at this point in the insurance industry's evolution. So that leads us down a track of really talking about what are we trying to build? You know, the current landscape is sort of a catalyst to expedite it, but really a vision of where we can get to as an industry is much bigger than this. It's really about what we call at CONVR super underwriters. And super underwriters are characterized by people that basically are able to produce more, right? They're able to quote more. They have a level of consistency in what they do. So the insights and the different aspects of a business that they take into consideration are consistent across policies and not variable based on how much time they have or, you know, other maybe factors that day that prevent them from doing certain things. You really want the same approach every single time you go to underwrite. And they're delivering bindable quotes. And what I mean by that is there aren't a lot of contingencies to get that underwriting analysis into a quote that can then become a policy. They're very relationship based. So Q2 earnings just came out for a lot of companies. And if you read through the leaders in our industry, almost all of them mention one of their competitive differentiators is their ability to move fast and their ability to maintain great relationships with their brokers. I don't think that's going away. I think that's a key cornerstone for our business. And then you want great underwriters focused on the complicated risks, right? If they're spending time on simple things that are really not necessary for someone of that underwriter's talent, then you're not utilizing resources appropriately. And finally, what do we want in every employee? We want them to love their job. That's really critical for retaining employees, for people to feel successful, to feel productive, and really to build a career. So as subjective as it might seem, but loving what you're doing is really critical in order to have any type of long-standing workforce. So going into more of a process view, right? Why do we need super underwriters in the world that we're in? Well, I've talked about this a few times, and I think a lot of people are familiar with the traditional way things are underwritten, which is agents or brokers will send an email to one or more carriers, where usually a team of people will parse that email out and try to figure out what is it about this risk that we would be taking on that would affect, you know, how it's underwritten. And of course, there's a lot of Q&A in that process, right? There's a lot of information missing. There's a lot of information that might be incorrect, and how it becomes incorrect might also be a question. So there's a lot of collaboration that has to happen there. And then eventually that information does need to be digitized, at least to some capacity. There are many cases where a lot of information is thrown away. It's never digitized, but there are core fields, core items about that business that have to make it into a carrier system. And then from there, and sometimes in parallel, right, we're researching on the side manually on an average of 30 data sources about that business, really to augment what we already have and build what we know about that business in general. So this process works. It lets us provide a quote back to the agent or broker, and it's been in place for decades. The thing is, it takes a really long time. It's not the most efficient way to do things, and you miss a lot of things. You can imagine with so much manual work, there's a lot of friction, there's a lot of fingerprints on every single policy. And that does affect the business, right? That affects what you can deliver to your brokers and agents against the expectations they have everywhere else in their lives now. Everything's instant, everything's fairly accurate. If you take a look at what consumer expectations are compared to business insurance expectations, there's a huge gap, right? And I think that's, even under normal circumstances, a call for change in our industry. So that's really where AI plays a big role for us, right? AI, artificial intelligence, is the new electricity. And I'm borrowing that from one of the top 5 experts in the world on AI, Andrew Ng, who pioneered a lot of things that are used today really throughout the AI community. He's a professor at Stanford. He's a former chief data scientist at Baidu, and he's the founder of the Google Brain Deep Learning Project. These were all fundamental contributions he's made. So we're going to go with his word on a lot of these things, and AI is transformative. We're kind of in the beginning of seeing that transformation, but there's quite a bit left. And one thing Andrew says frequently is to conceptualize AI, you need to think about automation on steroids. And to me, that really means there's a whole new world now of what you can do that previously could not be automated. And we'll dive into that. So if you think historically, if you think of a timeline of innovations and how it impacted insurance, you can really go all the way back to 1686, which is when Lloyd's of London was first established. And you could bid on charters, on journeys, on specific specialty risks. It was really a novel way for business to now have some level of protection behind it. And this surprises a lot of people, but the fax machine actually predates the telephone. It's back in 1843, and there are still fax machines used in insurance today, right? So that's a fundamental shift. Now, instead of having to mail everything, you have some means of transferring that information. And of course, that's enhanced by the invention of the typewriter. Now you have some standardization, which I imagine helped quite a bit in correspondence. And the telephone. So now you have the option of talking to insurance agents, of inter-business communication and intra-business communication. And that brings us up into another big shift, which was mainframe computing, which really goes back to the 40s and is so primitive we probably wouldn't recognize it today. But that was the beginning of, now I can hard code things, right? So that was a big step in automation, because it let me give instructions to a computer and it could perform computations accordingly. And then the desktop computer really brought that to our homes. It brought it to offices. It let us do this sort of hard coding automation way more prevalently. And I put a chord in here because, standards bodies are really important. And I think that elevated our industry significantly, because now you have at least some similarity, or a step towards more similarity across the information that gets exchanged. And then the internet, of course, which had variants throughout the 80s, but was established much more prevalently with the World Wide Web. And obviously, we're still seeing the impact of the internet and what it can do, and events like this one, really. And now we get into a period in terms of what AI can bring, where it's more of an academic nurturing that's happening in the 90s and really through today, They had AI playing chess, beating the world's best chess player. These are all landmarks of there's potential in this technology, but it's not even close to being realized yet. And somewhat overlapping that, there's been an expansion of available data. So the digital footprint of each business has expanded with the internet. And as all businesses get social media presence, as they get their own websites, as public records go more online, there's more and more information on that business that might not make it into an application, but it's available, right? And it's part of those, on average, 30 data sources that each risk has to be checked as part of the current process. And finally, you have some real good evolution in hardware that's especially happened in the past 10 years. And these last three items, right? AI evolving academically, the expansion of available data, and what I call the enablement of decision automation AI has really let us get to a point where we can now make decisions and automate things that weren't even a dream for most people back when computing first came out. So this is a new level of automation, right? This isn't a traditional core insurance system type idea. This is taking a lot of the decision making that people make today and taking that off their plate so you can free them up to do other things and really enhance their overall performance. That's where the whole super underwriter concept comes into play. And you can imagine if we go back to the convoluted workflow of today, which I think this diagram is too kind to, you know, really you can imagine how much back and forth there is on each of these arrows, how much paperwork could still happen here, how much information gets mistyped or, you know, misrepresented or not entered or persisted digitally at all. And really you can see there's a lot of opportunity here now that AI could be used to automate things that people did previously. And the way in which that can happen is if we reset this whole scenario and we go back to an agent or broker sending in an email for a quote, that carrier could, instead of manually typing that information, could use AI to read what is in that email and digitize it and put it in a common schema that lets you do all kinds of other things with it, such as summarize what matters in the submission, right? Classify the risk. What kind of business is this, right? What kind of loss history does this business have? And I don't have to read through hundreds of pages as a super underwriter. I can look at that summary without having to dig into the detail and get a pretty good idea of the risk exposure of that business. Similarly, and in parallel, you can also use AI to build a business profile. And this gets back to that digital footprint on that business. So instead of doing a bunch of manual searches on the internet, instead of looking at data sources and what other data companies have online, you could look at all those things that are already assembled for that business in one place, and it surfaces the relevant insights that I need to know as a super underwriter at this point in the process. And from there, we know a lot about the business, right? I know what's coming in through the submission. I know what the digital footprint is. I can use all of that with AI to answer many of the underwriting questions in my underwriting program. So that makes my job as an underwriter much easier because I'm not digging through the detail to find these answers. They're being surfaced for me, saving me a lot of analytical time and really just grunt work to dig these things out and add them up. And finally, you have the opportunity now with so much information being digitally brought to you to score this submission, to pre-qualify it, and to be able to prioritize it based on what this business looks like, how likely is it to be a good policy, and what part of my organization as a carrier should this go to. And of course, depending on the downstream processes from there, AI could feed a rating engine directly, and you could provide a quote back in near real time. Or for some business, especially larger businesses, there's still an element of human touch that you need to review these things and apply discretionary decision making, depending on what that risk looks like. But the point is, AI helps take out a lot of that work that is not necessary, that was very manual, very error prone. And it's really transformative in the way not just new business quotes can come in, but when you think about renewals, when you think about premium audits, when you think about endorsements, and even going downstream in the life cycle from there, there's a lot of steps here that no longer have to be done by hand. And that is really what's exciting about this technology. So usually people start gravitating towards, well, do you need people? And I like to go back to what Andrew tells us, which is despite all the hype and excitement about AI, it's still extremely limited compared to what human intelligence can do. So people are really good at balancing multiple, high dimension, complicated priorities. And a machine can't do that yet. In fact, it doesn't look like it's in the near future at all for a machine to do that. A machine can solve a discrete, complicated problem extremely well, but it can't think outside the box. It can't balance other things like what's the relationship with this broker? Are there two competing brokers, in a clearance situation? Is there a discretionary element to this business that the underwriter knows about, but is not represented in the analysis that AI has done? All of those things are critical, right? And that's where the value of being an underwriter and having that talent, that skill set really comes into play. So it's the power of these things working together that really produces that optimal underwriting process that every carrier is going for. And from there, you start thinking, well, how do I get there, right? Is this some sort of magic, or do I need to fall over myself a bunch of times in order to get there? And in this economic environment, I don't really want to deal with that, right? And that's a completely natural viewpoint, given the way things are. And I think Andrew provides some really good guidance there as well, because he doesn't see innovation as some random, unpredictable act of genius. He sees it as a systematic, progressive way to create things that haven't been done before. And I'm going to go into some tips here that I think will give us a better idea of how that systematic method could be employed. Before we get into that, though, going back to some of what we talked about with COVID-19, you can imagine how AI could help us surface some of these insights that would be relevant. And in this case, there's a handful of things that might help us. And we'd like the group to pick what the most interesting insight would be of these possible things that we could learn through AI applied to a business. The first one is, has there been cases of COVID-19 in the business facility? So that could be a restaurant or a nursing home or some other retail business where you get retail traffic. Has there been a case reported there? Is there a testing system in place for that business to help manage that risk? And are there procedures in place upon entry to that business facility? And has that facility been in the news, right? That could be of interest if there was a news article recently about that restaurant or that nursing home or whatever it might be. And then finally, if that business is currently closed, maybe they just couldn't find a way to operate in this economy, is that closure permanent, right? Or is that business still operating and still appearing to be biding its time to be able to reemerge? There's a lot of theaters and businesses of that nature that fall into this category where they're not down and out, but they aren't really reopened. So it's hard to know what their status is. So go ahead and take an extra few seconds here, vote on that, and then we'll take a look at the results. Okay, let's switch over to our results view. And we can see overwhelmingly getting those procedures in place for the business is of real interest to carriers. At least our audience today, the mix of our audience sees that as the most important. And that makes sense. I think that's a big part of managing the risk here. We also had about an even view on observing cases and having a testing system in place, with some interest in the closure being permanent. And our audience today is not as interested in the news, which is probably therapeutic to hear. So it makes sense to me in a way. So we appreciate those insights, and those are the kinds of things that we work on a lot here in terms of R&D, trying to figure out, what's really the best way for the industry to be able to manage these new sets of risks using technologies like artificial intelligence. So an approach that really works well here is when you're trying to implement a new technology, it helps to have a vision of where you want to go. You don't need to know how to get there exactly, but you should have a vision of, if it's creating super underwriters, what does that look like, right? How is that different from the business today that you're in? And how does that solve real problems that you have today in a new way? So I think focusing on solving problems really helps these initiatives along. Open exploration is very fun, it's very academic, but you're not really that focused on problem solving if you aren't defining the problem up front. And you could define multiple problems up front and try to kill multiple birds. That workflow that we talked about earlier has a ton of problems in it, right? Having to manually enter data, having to manually research data, having to parse and analyze that data manually. There's a lot of friction and probably a lot of micro problems you could focus on in that process. And then I think it's important for any of these innovation efforts really to have some quick wins. You need to get out of the gate and get a base hit and get things going. So finding things that might be smaller in scope but are clear wins, I think really help energize an organization, and you should be looking for that as you innovate. And then building some flexibility into what you're innovating. So things aren't always going to look the way they look today. That could be in terms of scale. Maybe you're starting small with some innovations, but you want to be thinking about, what's my vision once again, and what does that look like at scale? And what are things I could do today to at least take into account the flexibility I will need in the future? And that could be things such as simple as using a portal versus being able to go to an API down the road where everything will be more automated and you'll be feeding downstream systems and things of that nature. And finally, I think we can't overlook change management. The importance of people buying into these efforts and adopting them is really paramount. In the 20 years I've been implementing systems of various sorts, the number one thing that kills a system is nobody buys into it, nobody adopts it. So adoption has to be managed from day one. Once you're solving a problem, you have something that works, you need to find the people that are going to help build a core of believers in your company. It's really fundamental and critical to getting results from these types of things. And the way to do that is really to understand that people like striving for goals, right? So putting goals out there gives clarity to everybody in an organization. And instead of just saying we're all buying into this effort, that's sort of a dogmatic approach. It's much more effective to paint the picture and stimulate people's imaginations on what could be and make them part of the process, right? Involving people is really how you can get great adoption, making them feel part of it. And then, of course, that vision has to permeate all of the challenges, right? And there's going to be cases of failure, and that's okay, right? Because without failure, you're not going to have the feedback you need to course correct. And I always like to give the example of a torpedo, right? So if you launch an innovation effort, it's kind of analogous to a torpedo going towards a target. You launch the torpedo, it heads towards a target. But during that time, things may change, right? The torpedo might get off course, the target might move, the currents in the water might affect things. So the torpedo has to continually reset its direction. It has to continually course correct because it has a bunch of little failures along the way. And that's the trick, really, is you need to be willing to fail fast, fail small, and learn from it, and then be able to harness that to get back on track. So there is no single straight line to a successful innovation. It's a bunch of little failures that progressively bring you to where your vision has set your destination. So when you think about it that way, right, failing fast is a good thing. It's something you should embrace. And as long as you're learning from it, it's a sign of progress. So that was most of the formal presentation for today, and we're about a half hour in. I did want to leave some time for Q&A. So I'd like to open it up now for any questions that you have. And also, as I mentioned before, feel free to email me. I'm phil.alampi@convr.com, and I'd be happy to chat with you offline.
Great, thanks, Phil. And that was certainly very helpful, informative, and we can certainly attest to a lot of the principles that you outlined there in terms of leveraging AI in a lot of different areas. I'd love to talk further about all kinds of different places where we're applying it as well, leveraging standards and the data and the combined knowledge of our members, and what we'd invite folks to help explore together. We do have a question coming in from our audience. First one is, where do you typically see carriers go wrong in their innovations?
Yeah, that's a good question. I think some of those principles that we talked about towards the end are really where carriers can get lost, right? It could be too much of a big bang approach where there's not enough incremental testing, learning, failing fast in order to get to that vision. It could also be cases where they get paralyzed. So again, an advantage to starting small and being willing to fail fast is you avoid the paralysis of, is this perfect? It's not perfect. It's never going to be perfect. And you can't make progress with perfection. So I would say you want to start small to avoid a lot of the pitfalls, and you want to be okay with imperfection as long as you're moving in the right direction and you're learning. And I think that will help overcome where I've seen a lot of carriers have struggles in the past.
Yeah, I agree. Another question coming in. What kind of ROI can carriers expect from using AI in underwriting?
Yeah, I think that's another critical element, especially in our current economic times. I think ROI is as compelling as ever. Expense savings is something we've seen across the carriers that we work with as more of a driving pillar for action now. So, one element of ROI is how much manual work can you save through things like AI, and that translates directly to the bottom line. Another element of ROI, and we touched on it a little bit in our presentation, is more along the lines of how does this help strengthen agent and broker relations? Yeah. And, I think the amount of ROI depends on each carrier, right? And how you measure these things, but expenses are an easy one to predict. When you get into relationships, it's more about how do you measure that relationship, right? Is there an NPS or some other framework in place? And then can you tangibly look at the insights you have from your current relationships and say AI is going to help us improve some of these points that are straining those relationships? So there's a little bit of art, a little bit of science, but a lot of it is really back of napkin, right? If you can produce a quote same day, whereas before you were spending multiple days, that's a win, right? That's an ROI of many days or weeks or more of turnaround, which is going to help make you the carrier of choice in that market. Now on the expense side, again, if you put pen to paper, make some pretty conservative assumptions, you can come up with some really good savings in the short term. I'm talking 1 to 2 quarters out. just eliminating a lot of the manual work that doesn't have to be there today. So I hate to say it depends, but it really does go back to what are your current numbers and what are you currently measuring. And, again, if you're looking to spend a short amount of time to improve those things, I think there's a lot of potential AI can offer today to do that.
If I agree, and with any innovation, a lot of it is the purpose and the problem that you're trying to solve, and the stakeholders that are involved in it, making sure you empathize with them, which I think is really, to the next question we have coming in, understanding the focus on the end-to-end process versus specific points, and why is CONVR seemingly focused on the broader optimization of the commercial underwriting process as opposed to maybe a specific point or a transaction that might be leveraged.
Yeah, that's a good question. So going back to the diagram we talked about where the traditional process is pretty complicated in commercial underwriting, our vision as a company at CONVR is really more solving that end to end, right? So there's a lot of inefficiencies there. There's a lot of friction there. And at each point in the process, there's a problem that carriers will eventually need to solve. And if you can tie that together in one platform end to end, you really have a lot of advantages of running that through one platform. So our focus has always been, how do we make commercial underwriting better? How do we optimize it, make it more seamless so underwriters can shine? And in order to do that, you have to address the entire problem. You can't just address a piece of it. Ultimately, even if you start small, like we talked about, you're going to have to find those inefficiencies, find that friction, and optimize it if you want your company to be the best it can be. So that's really where the philosophy comes from, and where our platform was built around that principle that you need to address the entire set of problems, not just a subsegment of it.
Great, thanks, Phil. Got another one coming in. So how do we innovate in these challenging economic times with no IT department bandwidth? And I'd also add to that question is, and everybody's hair's on fire.
Yeah. And what's funny is that question would have been valid 1 year, 2 years, 10 years ago, because there's never IT bandwidth and there's always something else going on. And, this is where I think two forces have to meet within each insurance company. One force is you have to decide, this is the company I'm building. This is what the future of my company is going to look like. I'm going to embrace this technology. I'm going to be a modern carrier. And in order to do that, I have to prioritize it, right? That's one element of it. The other element is, with everything going on and with your hair on fire, as you say, there has to be some clever ways, and you have to have partners that work with you in a way that lets you demonstrate those wins incrementally along the way. You got to avoid tying up your IT department with something big out of the gate. You have to avoid asking for something that might be too unproven too early. And the way you do that is you incrementally figure out, what are the points in my process I know I can solve with minimal to no IT commitment on my end. And they're out there, right? There's enough inefficiency where you can find an entry point that doesn't require your IT team to give a lot of resources, or even any resources in some cases. I find, to kind of put it into tangible terms, starting with something like a portal, right? So if you have a portal to take in emails and digitize it and be able to review that information, you don't need IT for that phase one, right? And if that works well and that provides big efficiencies, maybe a phase two is then you start budgeting for IT resources and get that information integrated with other systems downstream, right? And maybe phase three is, well, now we want to get into more using third-party information to create new insights, but you have to build on it. So you really want to look for where you're bleeding the most now that's addressable with minimal IT. And that's what a good partner will help you do. At CONVR, we see this a lot across the industry. Carriers are typically more similar than different in that they feel a lot of the same pain. And, depending on the current process, there are entry points that, help minimize, I guess, a lot of the other things that have to go on within a carrier day to day.
Yep. If I could throw a little plug in there as well, that's those common challenges that that carriers face are exactly what AAIS is here to help do as well, to help you navigate those in the different contexts. In the additional constraints that we have, the challenge I think is making sure we open up to the creative solution, right? It's when we have these new constraints, that's when the creativity's got to happen. That's a little bit difficult sometimes for our industry when we're looking to do it. We have the process in place already, and we don't necessarily have it. If you have some more questions, are there any data security or privacy concerns with AI?
Absolutely. So just like any technology, right, there has to be policies, controls, standards. And one thing I've been impressed with is most of the industry already has these guidelines in place. Maybe it's the advent of cyber coverage, but the industry seems pretty aware of the core principles of security and how to maintain it. So as you might imagine, to do any solution at scale, right, you have to have something that's compliant with your security standards and conforms to what your company sets as a policy for security.
Yep, and and compliance is a really key word. Again, that's where we're really helping, and where we're initially using AI and machine learning ourselves is to help our members maintain the language. That is always an evolving context. As there's case law and as there's legislative action, pending or pondered, as well as those indicated, and leveraging both the experience, of our members, of our competitors, of our and understanding that fluid motion. And that's really one of the great uses of machine learning and AI that we've seen, is taking that consistent process and applying it to the new context, leveraging new data sources and the change, what's the weather today, and then doing the same decision you would do on a sunny day with a different result. So really exciting there. I don't think we have any more questions coming in, so we'll remind folks to check this out. The recording will be available shortly, and all the folks that were invited and registered, we'll make sure to get a link to that. We invite you to please reach out to CONVR and Phil, as well as your engagement managers at AAIS, to help you take advantage of all the features and structures and processes that we've talked about today to help leverage AI, machine learning in your underwriting process, as well as your general deployment and overall operations. Lots of different opportunities, and it is very approachable for organizations of all size at this point. Look, really glad to dig into and talk more about those applications that we've seen and then that we're doing together. So thank you very much and have a wonderful day. And again, please make sure to visit CONVR at convr.com.
Thanks, everyone.